Hello, everyone. Welcome back to Upside Down Data. Today, I want to talk about stablecoins, and specifically the huge supply of stablecoins that are sitting on the sidelines currently. So, if you guys like the content, subscribe to the channel, give the video a like, and if you're new here, check out our other stuff. We post about 5 or 6 videos a week, bringing you a data driven approach to market analysis. Now, as you probably know, cryptocurrencies like Bitcoin and Ethereum are often bought and sold, not using US dollars in a bank account, but rather tokens that are designed to equal $1 each. And those are called stablecoins. It's actually an impressively high percentage of crypto transactions that involve stablecoins. As of the end of 2021, that percentage was about 70 to 75% of the dollar value of crypto transactions. So, understanding stablecoins and how to analyze their metrics can give you an edge as an investor because of the importance of stablecoins to the markets as a whole. The thing that really put in perspective for me how important stablecoins are is this statistic from this article. It's a recent paper out of the econ department at Rutgers, and they report that the 24-hour transaction volume of the largest stablecoin, which is USDT, also known as Tether, is comparable to the daily volume traded on the New York Stock Exchange. I mention this to give you a sense of how much money we're talking about when we talk about stablecoins, and therefore how much of an impact they can have on the market. So let's take a look at USDT dominance. This is the percentage of the total crypto market cap that consists of Tether. And this is the weekly chart that I have up here. USDT dominance tells you how much of the money that people have already allocated to crypto investing they're currently holding in cash. The reason that I'm looking at USDT dominance rather than USDT market cap is because dominance is a better indicator of how much of an impact it could realistically make on price if there were a surge of buying pressure. So when stablecoin dominance, or USDT dominance in this case, gets high, it means that a significant percentage price gain is possible if sentiment were to change and people got a bit greedy again and started buying. That's obviously a big if, but this is telling us something about the potential for that to happen. USDT market cap, or stablecoin market cap in general, doesn't tell you that. So even if it goes up in absolute terms, so there's more of it, it doesn't necessarily go up in purchasing power, because if crypto prices are also going up at the same rate, then the new stablecoin value that's come in won't be able to buy any more of it. So it won't have any more of an impact on price, even if it's used to buy. The same thing is true to the downside. Even if USDT market cap goes down, which it has started to do recently after topping at an all-time high a couple of months ago, but even while that's happening, if prices are also going down, which is also true right now, then they won't lose purchasing power. So dominance tells you about purchasing power, and we see that right now in this situation because the market cap has rolled over and started to move to the downside. There's less of it, but as a percentage of the total crypto market cap, it's been increasing. And so that tells you that some of the money has been leaving the space entirely. But still, as a proportion of the total crypto market cap, the purchasing power of stablecoins has been increasing. And so that gives us the potential for a price surge, as I mentioned, if sentiment were to change. So, what we see looking at the chart is this massive parabolic move that's played out over the last 7 months. I mean, recently USDT dominance ran all the way up to 9.5% before pulling back slightly. That was when buyers stepped in when Bitcoin's price dumped below 18K. So we can see that reflected on the chart here. And now, after a retrace to about 7%, we're seeing some consolidation while investors, basically wait for Bitcoin to choose a direction for its next move. The price of Bitcoin has been moving sideways. There's a little bit of a volatility squeeze. It wouldn't be surprising to see a move come sometime soon, and we'll again see that reflected on the USDT dominance chart as investors adjust to the move in whatever direction it takes. Another thing that jumps out at me looking at this chart is the pullbacks on USDT dominance that coincided with the bull market that took place in the fourth quarter of 2020, and then the next bullish phase that we saw in mid 2021. In both cases, USDT dominance pulled back by well over 50%. A similar pullback from here would correspond to an influx of buying pressure equivalent to 4% or more of the total crypto market cap. And this is just USDT. A few percentage points worth of USDC and BUSD and other stablecoins would also be buying if that were to happen. Again, this is a hypothetical. Without question, prices would explode upwards for a bit if that happened. That might not happen anytime soon. We'll wait and see. I mean, people have been stockpiling stablecoins for months, and that could continue for a while. And some of that money could continue to leave the space. The point is that if it does, especially if the price continues dropping, that will mean that the potential for an eventual price surge will also keep increasing. A lot of stable coins will eventually become Bitcoin or altcoins. The main question is when. So this is the dry powder that's being accumulated, and it's called dry powder for a reason. It's explosive. It has explosive potential if it's ignited. So that's really what we're looking at when we look at stablecoin dominance. This is the dry powder and the potential for an explosion upwards. One other thing I want to mention about stablecoin dominance, and part of the reason it's useful is that it tells you how much of a price surge is possible without the need for any new buyers to come into the space. So what I mean is, by definition, stablecoin dominance tells you how much dry powder people who already invest in crypto have, because if you have stablecoins, then you're participating in crypto. So obviously, at any given time, it's more likely that an existing investor will buy more than that someone who has never bought crypto before in their life will do it for the first time. So stablecoin dominance tells you how much relatively trigger happy money there is in the space. Nobody has to persuade that money that crypto is cool or interesting or worth their time. Trigger happy money just needs to decide that today is the day to buy. So anyway, there's lots more to talk about with stablecoins. We'll probably do that in future videos, but I'll keep it short for now. Hope you guys found this useful. Thanks for watching.